everyone. Welcome to the CSPI podcast. I'm here today with Robin Hanson. Robin, how are you?
Happy to be here and ready to talk about a big topic.
Yeah, we're glad to have you. So before we get started, a lot of our audience is going to know who you are. Can you just give us sort of a brief description of your background? What do you do? What are your research interests?
I'm an associate professor of economics at George Mason University. I do an excessively diverse range of things. I just had a paper accepted in an astrophysics journal on grabby aliens. I've done information aggregation. I have 2 books, one called The Age of M, Work, Love, and Life, and Robots Rule the Earth, and the other, The Elephant in the Brain, Hidden Motives in Everyday Life. I guess we'll just find out more about my prediction market work in this talk.
You are. Do you have a degree in economics, or you have an astrophysics?
No. I have a PhD in social science from Caltech. So Caltech has a pretty small social science department with, say, 20 faculty covering all of social science. And so my degree was in social science. And the first time I went on the job market, I actually did better in political science. But the second time, I got this job offer in economics.
Okay. And you are. What are your interests? And one of the things I think we're going to spend the bulk of the time talking today is the idea of a futarchy. Futarchy. Is that how you pronounce it?
Futarchy would be a sort of fancy name for decision markets applied to government.
Okay.
But the larger topic would be, what institutions can we all share to argue and aggregate information so that we can form collective beliefs that we can act on together? And that's a question in academia, it's a question in government, it's a question in business. It's a very fundamental, difficult problem. And I think there's potential for doing a lot better than we've done.
Yeah. And so what's the problem? What do you see as sort of the main issue that this is trying to solve, besides a general,
most of you have been involved in conversations all your life.
Sure.
And you know that in conversations, it's very complicated and people have all sorts of agendas. And they aren't entirely honest all the time, and they aren't focused on particular tasks. And so it's not clear that you can believe what they say. So a reporter calls up various, expert people with credentials or whatever and gets quotes for them, but they don't have a good incentive to tell their best honest estimate of the truth in those interviews. They're often incentivized to sound provocative, to sort of ally with whatever political tribe they're with, et cetera. And, we have these problems all over in all the rest of the conversations we have in business and government and academia, et cetera. So the question is, could we give people more direct, better incentives to actually tell the truth and figure out the truth, so that when we had a meeting and people raised hands and we made a decision what to do, we would be doing it on the best knowledge we could have?
Yeah. So the way you answer that question, that made me think of something. So do you see this as a matter of incentives, in the sense that whoever the experts are, they just have to have better incentives? Or do you also see it as sort of a selection process, in that there is some trait or collection of traits that humans vary on, and some people are just better at getting at truth than others? Do you take the first position?
Both of those factors are important. And so you want an institution that relies on both. You don't want to just take a particular group of people and give them better incentives, nor do you just want a process that selects people. You want to both select people and give them good incentives, so that people know when they're selected that they will face those good incentives, and they will be selected on the basis of anticipating that those good incentives will work well for them.
Yeah. And so futarchy is the process of aligning incentives to get better opinions, better policy.
Well, futarchy is decision markets, which is an application of prediction markets in general. So, which is an application of speculative markets in general. So we might say we have this general institution of speculative markets, basically stock markets, commodity markets, betting markets, et cetera. They've been around for many centuries. And they have this remarkable property that they often aggregate information very well from diverse people. And so the idea of prediction markets is to use that mechanism on purpose to get better information about particular topics of interest. And then decision markets are prediction markets where the topic is directly targeted at a particular decision, where you're asking about the consequences of a particular choice to make those market estimates and advice as directly actionable as possible.
Mm-hmm. So it would be an example of futarchy. Say, if there's a bill before Congress, it's a say stimulus bill, something in the news, and you would have some measure outcome, the GDP of the country in 5 years if you pass it or you don't pass it. And then basically the system you envision, basically there'd be a way for the legislators to have their votes tied, or whoever makes the decision tied to the results of the market. Is that right?
Right. So I think it'd be easier to start with like a more personal, smaller scale example before we get to reforming national government.
Sure.
So I would suggest considering fire the CEO markets. So in ordinary public companies, there's a CEO, and one of the most important decisions that the board of directors makes is whether to keep or fire the CEO. And so the proposal would be to have stock markets that are conditional on whether or not you fire the CEO. So an ordinary stock market, you trade stock for cash, and the price there is an estimate of the value of the company and all the different scenarios it might be in. Now we're going to make called off stock markets, and these are markets where we make trades of stock for cash, but those trades are called off or made as if they never happened if certain conditions aren't met. So we could have a if the CEO stays in power through the end of this quarter version of the market, and in those markets, the trades will be based on the expectation of how much the company will be worth if the CEO does stay. And then we could also have markets where the trades are called off if the CEO doesn't leave by the end of the quarter. And now this will be markets where people estimate how much is this company worth if the CEO leaves. And then the difference between those two prices, CEO stays and CEO leaves, becomes an estimate of the value of the CEO for this company. And that would be direct decision advice. The board of directors could look at that price difference and say, should we keep them or should we dump them?
Is there any legal barrier to a company doing this or someone setting up a market like this?
Well, there is SEC regulations about commodities. And so this could be thought of as a stock derivative. And so you need some sort of permission there. And that's the main regulation limit. Of course, you'd also need the board of directors and the company to be interested in these numbers, and that's more the real limitation.
Yeah, but it seems like you don't need. It seems like you don't need to convince that many people, as long as putting aside the regulatory issue. Putting aside the regulatory issue, so if you have a corporation, presumably if the system of markets being better than other kinds of decision making is right, they should have a huge advantage, right, in the market, and they should be able to make a profit, and their business should be.
Our consistent experience with speculative markets is that when we compare them to other mechanisms like polls or committees, they're either about the same or substantially better. They're almost never much worse. So sometimes the question is just easy and any mechanism can give you the answer. Like, is the sun shining right now or something like that, right? Everything will just tell you the answer. But then sometimes things are hard and complicated, and then existing institutions are doing a bad job. And in that case, the market can cut through and give you a better estimate.
Yeah. Okay. So I get that. So but then the question is, like, wouldn't you just be able to? I mean, you should be able to do this, and then you can just have sort of a tournament for your CEOs, right? You could have 10 different prices, right? And you can just
right. So this conditional market mechanism hasn't actually been tested out in the world outside of the laboratory tests, in that we haven't been able to get people interested enough to try it. So we've had a lot of tests of speculative markets that aren't conditional, in the sense of we've had markets on deadlines, whether you make a deadline in sales and things like that. And we've probably had 100 different trials like that over the last few decades. And typically, what happens is that if there's enough support for the market in order to induce enough activity, then again, the price is about as accurate or more accurate than the status quo, and most users are satisfied and the costs are modest. And that's been the history for many decades. However, a key problem is usually the market gets killed in the sense that organization says to stop and doesn't continue it. And the main reason is that it's relatively disruptive. These markets are politically disruptive, and the way they are disruptive is analogous to, imagine you put a very knowledgeable autist in the C-suite. That is, somebody in the C-suite who knows a lot about the company, and and they go to the meetings and they just blurt out when they know things that is relevant to the conversation, but they have no political savvy. They have no sense of what does anybody want to hear or who will be bothered by anything they say. That sort of an autist would not last long in the C-suite. They would be shunted aside and become an advisor to someone, perhaps trusted advisor to their side, but they wouldn't be allowed to speak in the boardroom. But that's what a prediction market is. It has no idea who wants to hear what it has to say. And it will often say things that people do not want to hear and that embarrass them and then contradict what they've said. And then all the worse, of course, it'll be proven right.
Yeah. So, but what's stopping the autists? Or does it say? I mean, I guess what's stopping them is nobody has just done this yet. But theoretically, you could imagine the autists setting up the rules for the corporation, right?
You might,
the board,
if they were in charge at the beginning, sure.
Yeah, and that's what you need. You need one rich autist interested in these ideas. And he would go and he would say the board has to operate according to these tournaments.
So now we move to the question of like, what fraction of companies out there are actually maximizing profits?
Yeah.
So it's a very basic question in economics and in our world. We economists tend to assume as a simple initial working model that organizations that are for profit actually do maximize profits. And that's the thing they usually do. So if you give them a choice of A or B and B is higher profit, they'll choose B. And so here, if you apply that model, you say, well, this looks like it would give them key information to make key decisions, like, will we make the deadline? And it would be valuable and the cost is relatively low. So of course they would do it. That's what you would say if you were applying that theory. And then here we have a case where it looks like, well, it hasn't happened yet. And you might think, okay, innovation is slow. It takes a while, but we've been waiting several decades. And honestly, if I look across a wide range of other areas of corporate behavior, I can't fully support this profit maximizing theory.
Uh-huh.
I think I can find a lot of other places where what they do does not maximize profits. And, I could give you a long list of examples. We could go through some of those, but, then the question is, well, how do I come to terms with it? What theory do I have of firms in the absence of profit maximizing to explain their behavior?
Yeah. So, well, actually, I like the idea of going through the list. So, besides not operating according to betting markets,
Right.
What leads you to the position that corporations?
Well, of course, until recently, we appeared to have too little remote work. Most commenters had thought remote work should be much more widely adopted, and it hadn't been. We also have the standard story of too many meetings. Almost everyone in large organizations complains there are too many meetings with too many people in them that last too long, yet they keep happening. We usually have too many people interviewing new candidates, as opposed to just looking at their credentials on paper. We often have, when a new person becomes the boss of a group of people, usually some of the people they're the boss of, they inherited, and some of the people they get to pick. And usually they give higher evaluations to the second group of people. And everybody knows that, but they leave that on the books. We let them do that. And there's a standard not invented here bias where we're not so interested in stuff that wasn't invented here compared to stuff that was invented here. There's yes men bias, which is, of course, famously well known that. So if you're a manager and you're trying to get people to tell you the truth about things, one, powerful strategy is to ask them what they think before you tell them what you think.
Yeah.
And then use what you think as a way to judge how good what they think is. So even if you're not very well informed compared to them, it still can give them an incentive to tell you what they think, because their best guess about what you think is still whatever the truth is. However, many managers don't follow this strategy. They very clearly telegraph what they think and therefore induce other people to be yes men or yes women, where they just parrot and repeat back what the boss said. So that no longer produces an incentive for the other people to think carefully about what they think. Instead, it gives them incentive to parrot what the boss says. So these are, a half dozen examples here, but I have a blog post somewhere where I went through 20 of them. And again, we go down the list and we go, each one, if it was just one, I might say, okay, I just don't understand that somehow. I'm not looking at it right. Somehow it really is profit maximizing. But if I've got a list of 20 of these things and they're big things, I go, well, I guess I need a better theory.
Yeah. Okay. And what is the alternative theory?
I'd say that we want to think of large organizations as fields of battle between coalitions. But that each coalition is fighting for control over the organization. And most of these policies are in the interest of individual coalitions. They're just not in the interest of the organization as a whole. So, for example, in a coalition, you want lots of your people in the meetings so that they can push for your agenda. And it's great if the other people aren't in the meetings, especially if, say, they're remote working and they can't make a lot of the meetings. So you want the other people to be remote and not in meetings, and your people in the meetings. You want your people to be interviewing new candidates so they believe that they owe you a debt of gratitude if you're hired, et cetera, down the list. So when coalitions are competing with each other, there's policies that help coalitions, and which isn't so much what helps the company. And so related to prediction markets or forecasts, most coalitions are sort of organized around a set of shared interests, and they form an agreement to support certain projects, and they just don't want their agreement to support those projects to be at risk to fluctuating estimates. So prediction markets will fluctuate, right? And at the moment it might favor something, and then a week later it might change its mind, right? And that's just not very reliable as a member of your coalition. You want to sort of get together and support George's project and George's division, and then you want to do that, early on and stick with it, regardless of how the estimates change.
Do you think that this is so? Do you think this is what happened? I'm sure you've seen the charts showing, for example, in universities, administrators have been, the number of administrators are going through the roof, and the number of professors is flat or just barely rising. And I saw another one with the same thing with doctors versus medical administrators, and then someone on Twitter said, that chart was no good. I'm not sure if it's good or not, but do you think, as a general matter, this is what's happening? Perhaps there's a sort of this administration bureaucracy where this coalition is getting bigger and bigger, and it's just expanding because it's sort of optimized for this environment.
It's not a crazy theory, but I haven't thought that through. The question is, if I had a coalition in a university, for example, would increasing the number of administrators within my part of the university help me win coalition battles against the other ones? If yes, then the theory is predicting that this happens, but it's not obvious that that's true. But I don't know university administration as well as other people, so maybe someone who knows that can comment.
Yeah, and so is this just a matter of when institutions get too big? So, I mean, does your theory predict that the smaller the corporation, if you have a founder, for example, with just a founder, just a few people, that they're going to behave more rationally than a larger corporation that's been around for a while?
That's not my theory. I mean, that's just very widely predicted. So, almost everyone says that small organizations have fewer of these coordination problems. They have other problems. There's a lot of problems that bedevil small organizations. And often it's just like the leader is arrogant or, blind and has all sorts of just personality issues, et cetera, right? And that tends to be the kind of problem you have with very small organizations, is these sort of very personal conflicts. But at least you don't have these larger coalition battle problems.
Yeah. So this is a problem. It seems like we get. So this theory would go. I mean, so you're taking. Well, let me ask you this way: what's wrong with the sort of the classic free market position? That what'll happen is you'll have varying degrees of rationality, and the ones that are the institutions and firms and individuals who are rational will just outcompete the ones who are not. What do you see going wrong there?
So, I mean, I think, in fact, the correct response is to say, the free market version is probably the best. You just have no idea how much worse things can be.
Yeah.
I mean, so people often look at sort of the status quo of a business world, say, that is relatively free market, and they look at this up close and they go, this looks terrible. How could you possibly be defending this? And the argument has to be, well, it would just be so much worse without this. And in fact, often if you look to large, stable organizations like universities and government agencies or churches that have been around for a long time, it is in fact worse. I think that's roughly right. Another story might be, we've hobbled some of the competition between firms that might solve some of these problems. So I honestly think one of the biggest wins we could do is to just allow stronger hostile takeovers. The laws at the moment make it harder to do hostile takeovers. They require a substantial tax on them, in essence. And so if you see a badly run company and you have an idea how it could be run better, the problem is, how are you going to profit on that? So, but if you could just buy up the company, change its management and then sell it again after it was better, that would be a big, powerful engine for making it better. And there have been times when that mechanism has been allowed to do more, and it has made huge changes. And that's what inspired people to lock it down and prevent those changes, because they were scared it was coming for them.
Yeah. So there's just this status quo bias. What's the regulatory barrier there? Is it antitrust, or what is it that makes it difficult to do this?
So the key thing is that when you are going to try to do a takeover bid, you have to warn people so they can bid up the price on you,
Uh-huh.
which means that you end up paying a substantially higher price, 20% even more above what you would have paid if you could have bought the stock in stealth without people knowing you were trying to buy it up.
How do you where do you this is a technical question. How do you announce it, and what happens is just some other
So
buyer?
there is a formal process by which you announce that you have a certain number of shares in the company and then you're hoping to buy more. And
Yeah.
then again, you can't have bought very many of them by the time you announce this. And then, what typically happens is the prices get a bid up, and you, in the expectation that you'd be willing to pay more for the company. And then, you may or may not succeed in buying it up. There's also a number of other things we allow, such as poison pills, various rules in which if there's a takeover, then all of a sudden some people get some extra stock and some extra voting shares and some extra
Uh,
abilities to make it hard for you. And, we have a whole bunch of these rules that have basically made it difficult for people to take over companies.
yeah. And so your view is basically irrationality persists. Irrationality is in non-profit maximizing behavior, and then that presumably that's hurting the aggregate wealth of society that exists because basically we're protecting institutions. We have a status quo bias.
We're making it hard to make changes. On the other hand,
Yeah.
Competitive business world is one of our best worlds we have in our world. It's
Yeah.
one of our shining examples of productivity and innovation is the business world, to the extent that it is free to do something. So now you could just say, well, if we were make it more free to pursue profits and to innovate, then it could be even so much better.
Yeah. So yeah, I mean, it's funny because you say this is the best, this is the best world we have, and you can compare it to other things. So my background is in international relations, and people often start with the assumption that the country is trying to maximize something, whether it's
Right. So that's even crazier an assumption. And so presumably it's even easier to find counter examples to that.
Yeah. I mean, it's hard to. I would go further and say it's harder to find
Examples.
examples. Yeah, exactly. Why doesn't the U.S. just
Right. I mean, how many wars were started that were actually expected profit wars, for example?
Yeah, they tend to be pretty crazy, and the whole field. I mean, the whole field to a certain extent is sort of built around it. Of course, it's not how everyone thinks.
Right.
And, it's a big political
But
science.
in the future, we could imagine, for-profit company nations, for example. You might imagine that it would be possible to make better run nations, and that they would be more rational in this sort of selfish strategic sense. And that's a thing that could happen in the future. And in some sense, futarchy is this proposal to use decision mark for governments, and it could in fact achieve that. Maybe we should say a bit about how that might work.
Mm. Yeah, well, let me ask you: does futurarchy have sort of is it? Do you put it in a larger intellectual tradition? Because a lot of people, when they're coming up with that idea, did you come up with this term, by the way?
Yeah, and I've been ridiculed for it. It's not. It has various associations in different languages, etc.
Yeah,
But I was just thinking of it as a future government. That was my, origin of the name. And of course, the context. There's two key contexts. One is to show how far the idea could go. If you just talk about, say, firing CEOs or changing churches or, all sorts of small organizations, I don't think people get quite as inspired as if they could see how it could become a form of government, because that's pretty grandiose and high status.
Yeah.
So futarchy is trying to show how it might look if you went all the way to that level of application. Not that I'm recommending that we do that first at all. I would recommend we try small scale experiments and work our way up to large organizations, but still that can be an inspiration to go down the path, because you hope you might go that far. And of course, it's also related to other proposed forms of government. And so it has some differences and similarities to others. And you can think about what it's emphasizing and what its problems are compared to the others.
Yeah. So we put aside. We started with the markets for CEO performance. Can you talk a little bit about sort of the broader, the grander
Right.
idea? How would your ideal government?
So
function?
in the CEO case, we have an outcome that we agree on. That's the relevant outcome, i.e., the stock price for this public company. And then we had discrete decisions: do we fire the CEO or not? And that's the key things we need to make this apply to other things. So for a national government, say, the discrete choices would be each new bill that's proposed. And we'd be asking, if we pass this bill, are we going to be better off? And then for the outcome, we're going to need to construct it more for a nation. So the idea is the legislature still exists, but now they vote on bills that defines a national welfare function. So it's a bit like, say, GDP at the moment. Say the Bureau of Labor Statistics defines GDP, and then it oversees the measurement of GDP. And of course, many scholars often look at GDP numbers and say that the countries with higher numbers are better and try to recommend policies that would increase your GDP. Well, now we're going to authorize this same sort of agency to estimate number like GDP, except we're going to tell them to put more things in the number. So bills before Congress would say, count more trees and count leisure and count sort of international reputation. And they would just make a bigger formula that included all the stuff they cared about in this measure of national welfare. But now there would be assets, financial assets that pay out in units of national welfare. So if national welfare ends up being 12.9, then it pays out $12.9 or some other financial unit. So now we can then bet on national welfare. But more importantly, we can bet on national welfare conditional on whether a particular bill passes. And so then for each bill, we'd have these two prices: the price of national welfare if the bill passes and the price if it doesn't. And then the difference between those two prices is a direct advice about whether or not to pass that bill. So we could set that on the side and just have it be giving advice to a legislature, or we could put it directly in charge and just say, when the market approves of it by having a higher price, then that's just as if the legislature had passed it, and it just becomes law.
So like to just make sure we're clear. So let's say we're debating Obamacare, and then we would have to first have sort of an aggregate measure, right? We'd say, what's GDP going to be? Maybe give that 40% of the calculation. What's human life expectancy in the U.S. going to be in 10 years
Right.
or whatever. And then you would just do this for a bunch of different things, and then you would just have a market basically say, okay, if Obamacare passes, it's going to be X, and then Obamacare doesn't pass, it's going to be Y.
Right. So this national welfare function, we don't have to redefine it for each new bill. It's just the standard welfare function that we have for all the bills we consider. And then, sometimes we'll change the welfare function, and then we're changing our metric of consideration. But basically, we might have, say, 2 slots a day where a new bill is considered by this process, or might even have, 10 slots a day. And at each slot, we might even have an auction to decide who gets to put their bill up during that slot. And then during that hour, say, or half day, the market decides whether that bill passes. And then we go on to the next bill in the next half day. And again, the national welfare measure would just be the same measure that we had decided on months ago.
Yeah. Okay. And do you figure that? And you figure this is, you don't need the assent of Congress to do this, right? I mean, ideally, maybe it would be like,
right. If you want to just make it be advisory, you just need the legal permission to create these markets. And then we could just sit on the side and we could track, say, when the Congress passed a bill versus didn't pass a bill, did it follow this market advice, and see sort of the net effect of these things. But it would be better for many reasons if it was just more directly in charge.
Yeah.
I mean, we already have a democratic system where there are often experts who know the right thing about bills, and they tell each other the right things, and the public never hears that. And so politicians just ignore it. So the question would be, if this was just on the side as an advisory thing, would the public pay any attention?
Yeah. How serious if you had how serious are the regulatory barriers? I mean, if you had enough, if you had enough money, could you do this for the things that Congress is debating right now?
Well, I wouldn't do this as the first thing. So again, this would inspire you as an endpoint that you could eventually get to. But a shorter term project would be, say, in a presidential election, you've got the Democrat or the Republican who might be president. And we could just estimate some outcomes for the nation conditional on whether the next president is Democrat or Republican, right? So we could have GDP, we could have lifespan, we could have war deaths, we could have, all sorts of numbers. And that would be a straightforward thing to do every presidential election. We could just be estimating the consequences of who we elect. And we really haven't done that before.
Yeah. Is that the best way to do it? Or is that going to pose difficulties? Because if the market comes back and it says Democrats are unquestionably better for the country than Republicans, or vice versa, that'll poison that'll poison the idea of betting markets with half the country, wouldn't it?
Well, so you'll want to sort of collect a track record over a longer time. So my overall plan is that I want these things to happen in small organizations to get track records there and then slowly work their way up to bigger things. Uh, we don't want the only main trials to be sort of national level politics. That doesn't make sense because you don't really even get enough data there. Right? You want a lot of smaller decisions where you get a lot of data and where you can show that this is just working well. You might think of it like, I'm old enough to remember the time when the government started to use computers for things. Yeah. And they did that because the private sector was using computers for things. And people said, hey, why isn't the DMV using computers if the private sector is? And they got kind of embarrassed and they decided they would try to use computers, right? Because it was just obvious that elsewhere this was a pretty good idea, right? That's how you want to do innovation ideally, is you just want to, have lots of people using it because it just seems to work. And then eventually the government is shamed into doing it too.
Yeah. And so do you see the opportunities out there besides the CAO markets? What else could be sort of promising places to do this?
So this mechanism really is quite general and it can apply to a very wide range of problems. And so I would basically mainly be opportunistic about where, there's a group of people who are willing to try it there, but just to whet your appetite, we can go over a lot of options here. So most organizations, hire people regularly. And each time they have a job opening, they usually interview several people for each job. And when they hire them for that job, they're hoping for certain outcomes. And usually they have some internal process that rates how well that employee is. And they could, in 2 or 5 years, have a rating for that new employee of how well they did. So it would be straightforward then to have markets on each candidate for a particular job position saying, what will be the rating of this employee if we hire them in, say, 2 or 5 years? And that could just be a general process every time you had a candidate for a job opening. And of course, every time you've got a project with a deadline, you should have a market on whether you'll make the deadline. And you could even have that market on whether you make the deadline, give you that probability conditional on changes you might make to the project, i.e., pull back on the requirements, add resources. Those are all sort of obvious. Change who's in charge of the project. Those are all obvious, things you might do to see if you can make a deadline. Students who are, high school students applying to college could, have markets saying if they chose college X, what will their outcomes be, say, after they graduate, in 5 years, or if they chose college Y, and the markets could tell them which college to pick. Or on the other side of the equation, the colleges could have markets in the student applicants saying, if we accepted this applicant, how well would they do after 4 years here in our program, say?
Who would be betting on, for example, the individual kids going to one college or the other? Their friends and family, or
well, so for all of these markets, there's a key question of who do you allow to participate, and one of the issues there is that whoever you allow to participate gets to see the information, the market prices, and they're also the people you want to reveal information to, so they could be better informed at making choices. Mm-hmm. So if you had a student who was willing to let the world see their, test scores and their application essay, and even some description of their priorities or whatever, maybe, personal information, then you open that market to the public and then people could browse that material and make a guess about that particular person. Yeah. There's a trade-off, though. If they don't want to reveal as much information about them, then they don't have to, but then fewer people in the market will be able to make a good judgment, and they will just be degrading the quality of their estimate, as a cost of keeping some privacy. And, that's completely reasonable to do, but you just want to make that trade-off. Another application that would probably be even more disruptive is when you're thinking of marrying someone and you ask the markets, how will our marriage go if we get married? Or you could even, think of dating particular people and ask, how will it go if I date this person? Those are things, of course, you would mostly want to be asking people who knew you somewhat better. But the whole point of these markets is you don't have to decide who's good at answering questions. You just open it up and you let them decide.
Yeah. Yeah, I think in that case in particular, I think there's such an informational asymmetry between you as an individual and everyone else in the world that if there's one place where betting markets maybe cannot improve on just people making their own decisions, it might be, marriage and dating and things like that.
But now, other people who were in that market would want to know if you were betting in it too. So there's a general phenomena in these markets where people are should be wary of betting against people who know a lot more than they do. And this is, for example, one of the rationales for limitations on insider trading in stock markets.
Hmm.
And there are many reasonable choices to make there. So you could tell the world, well, I'm going to be betting in this market on whether my marriage works, but you're welcome to bet too. And they might think, well, I don't know as much as you do. I'm not going to touch that.
Uh-huh.
And so in order to get them to bet, you might say, well, I'm not going to bet on that. And neither is anybody in my family, right? And you could just set a limit on who's going to be allowed as a way to entice people farther away to participate. And similarly, a company who has a stock market on that company, if they could choose to allow insiders, then they'd have a choice. If we allow insider trading, then people who are not insiders will know they might be trading against insiders, and that might put them off from trading on that stock. Or on the other hand, if we allow, if we prevent the insiders from trading, we will entice more outsiders to trade. On the other hand, we'll lose the information those insiders would have given had they been allowed to trade.
Yeah. So just that makes me think. Do you have an opinion on laws against insider trading? Do you think that they're
Well,
generally
it
good or
seems to
bad?
me that it's the company that has the costs, so it's not clear to me why anybody else should be having a say. Whoever owns the company is making the trade-off in whether to allow insider trading. Now, of course, if the company is not being run in the interest of those investors, then we have to worry about making a good choice about insider trading, but then we have to worry about making a good choice about everything the company does. I mean,
Yeah.
that's what we were talking about before. When companies are not run for the, maximizing profits, then the investors have to worry about what they are being run for and whether they're going to be basically stolen from the people who are managing things. But, insider trading is one way they could be stolen from, but there's 1,000 others.
Yeah, the one thing I think one place where this might really work is I think sports. So, and this is something that you could get a lot of people betting on because people love arguing about sports. So you could have a thing where you have the NFL or NBA draft, and people always debate should you draft this player or that player, and you could have markets easily based on
Sure.
how
I
much.
just happened to have a conversation with someone on that a few hours ago, but it's still an idea that's going to happen someday. So, what people say betting on a football game today, you're betting on who's going to win the game and say by how many points, but you might have more fun betting on each play. That is, not only betting on what the play will be and how it'll go out, but recommending on the play. So you could say, if we pass this play, how many yards on average will we get? If we run this play, how many yards will we get? Or what's the chance of making a first down? You could bet on the consequence for each play. Similarly, in a basketball game, you could bet on taking out a player, putting a player in a automobile race. You could bet about when you make a pit stop, when you don't. There's all these choices in games, and I think people would find it more engaging to bet on recommendations for choices in the game.
Yeah, yeah. I mean, you can already with the sports betting. If you go to the websites, you can bet, for example, not just on the game. You could. I don't know if you can do conditional bets. I have never seen that.
Right. I've never seen conditional bets on choices.
Yeah,
That's the key thing here. A choice of a player, a choice by a coach.
yeah. I mean, I've seen stuff like who will win the tip off in the basketball, who's going to win the coin toss in a football game, who's going to win the first quarter, who's going to
So
score more
I once
points.
looked on to doing this for college war games. So as you may know, many war colleges have war games where they put teams on different sides and give them various equipment in a simulated war, and they have them go to war. And you could imagine, letting everybody else who's watching the war game give advice about particular strategies in the war game. And that seemed plausible to me. But then when I talked to people at war colleges, I found that most of these war games are kind of fake.
Yeah,
They have a predetermined outcome. That's some lesson they want to tell. And so
yeah.
they aren't really letting it be open to winning one side or the other.
No, that's funny because you'll see headlines every now and then. And they'll say, "Oh my God, the U.S. loses to China, in a war game." And yeah, I
Yeah.
almost thought that that's good
I'm
for
sure
example.
there probably are real war games somewhere. They just aren't at the war colleges, apparently. So
Yeah,
that's where I was thinking I could sort of convince somebody to try this sort of thing. But
yeah. So, I mean, have you had any partial successes? Are there projects that are getting off the ground that you are excited about? I mean, have people taken up your ideas anywhere?
there's been a whole pile of work in blockchain where people have created prediction markets platforms and tools on various blockchain systems. And unfortunately, most of that work has sort of been at a low level of tools and platforms, so they haven't really gotten very close to applications. So blockchain people are just mostly software people and algorithm people, and they're not so much business people, who work with particular clients. And so they just haven't been very eager to get their hands dirty working with particular, customers who might want to do markets on particular things.
Yeah.
But they've still been collecting all these tools, and so hopefully someday somebody will use all those tools to connect to customers.
What is the advantage of the blockchain? What is the difference between a blockchain, say, market versus just something like predicted?
Well, that's an excellent question. So initially, the story was that blockchain was out of control, that it couldn't be regulated. So you could set up a system on a blockchain, and if the regulators didn't like it, they didn't have anybody to go to stop it. The blockchain just kept going regardless of who didn't like it. And that was a big selling point. People said, well, look at all this financial innovation we can do because we are freed from existing regulations on the blockchain.
Mm-hmm.
So that's what they said. And then a lot of companies formed on this basis, but these companies didn't sort of take personal strategies to match that rhetoric. So you would think if your plan was to put a, product on the blockchain and that you were going to say nanny to regulators because you can't get me, you wouldn't have a big public presence with a headquarters and your picture in the magazines and show up in person at conferences, right? Because well, that makes you more obviously a target, right? And so that's what they did, though. And then they sort of backpedaled and said later, oh, we're following all the regulations. But people don't really believe that. So it's been this big question, to what extent will governments crack down on these blockchain things that, at least from the government regulators' point of view, are not following their rules.
Yeah. Do you have in mind the Coinbase news that came out the last few days, or today? Was it today or yesterday? That
this is just a continuing issue. I don't have any particular recent event in mind, but but there are lots of stories about regulators thinking of doing a lot more regulating and cracking down more. And this is a big question. A big question about blockchain is how far will they crack down, and what will be the consequences? Of course, people say, well, in principle, Bitcoin can keep chugging along even if they do crack down. And no doubt that's true to some degree. But, the question of how much activity there'll be is still somewhat open. I mean, you could have it chugging along with far lower activity because a lot of people had been discouraged.
Yeah. Well, yeah, just for the listener, we're talking now on September 8th, 2021. So who knows when people will be listening to this. And there's been just news in the last few days about Coinbase and the SEC. And I don't know all the details, but it's something like that. Where Coinbase
in the last few months, China had this big policy of saying no more mining here.
Yeah, exactly.
And so that, there was a big drop, I believe, in prices right at that point, reflecting the fact that people then realized there'd be a lot less stuff happening in China.
Yeah, my understanding, but that wasn't reflected in the. I mean, Bitcoin has been doing pretty well recently, right? So it was apparently not fatal or not that bad. For the
Bitcoin, volatility, right? In these prices is so large that I wouldn't draw much of any inferences from, the price movements. It's just wild.
Yeah, but the price for Bitcoin's been doing well, right? So isn't that an indication that whatever the Chinese did, it wasn't harmful to the long-term prospects of cryptocurrency?
Well, the volatility of these cryptocurrencies is just really large. So that makes it hard to draw many connections between particular events and what's happening with it. And that's an issue about these conditional markets. So people have noted that if you have a stock market sequence and then you have events, you can try to correlate events in the stock market sequence in order to untangle conditional estimates. So, for example, people tried to do that with betting markets on elections in the stock market in order to say which candidate is better for the stocks by looking at the correlation between those prices. And that's possible to do, but the price movements are noisy, and so there's a lot of room for arguing there. And so just the direct conditional markets are a much clearer signal than these correlations in prices.
There's noisy, but there are a lot of elections, right? I mean, there's a lot of you could even go you can even do things like in places that are you have all the national elections, right, every 2 years.
Sure.
And then you have even local elections when you have mayoral races. I guess
right. You just don't have betting markets in all those races.
Yeah, but you have corporations that are, located there, for example,
Sure.
or industries there. So it seems like I mean, anecdotally, it seems that um, I remember. Do you remember the Bernie Sanders during the primaries? He won some primary, and then he said, "Oh, the stock the or he lost a primary." And he lost, and then he said, or he okay I think he lost a primary, and then the market went up, right? And then his argument was, look, these billionaires
I'm
are
bad
so
for
happy.
business, and that's the way I
Yeah,
want to be.
he was proud. He was proud of this. So given
Right.
the political culture, it was the other way around. He might have won and it went down.
Right.
I don't remember.
So,
I think he lost it.
so a
But
standard story in finance for a long time has been, we've got thousands of market prices in the financial world, and there's all these events that happen in the world. So in some sense, there's really all this information embodied in all these financial market prices, especially if they fluctuate every minute or so, right? And so in principle, the answer to all your questions is somewhere out in this vast cloud of financial market prices.
yeah,
And that may well be true. It's just not at all transparent, right? You'd like a clearer answer. And so a thing that betting markets can do is give you a more direct, clearer answer, even if in some sense that answer was already implicit in all the other prices.
yeah, I think transparency is key, because if someone is doing this research on the effects of stocks and on the market of election outcomes, I would think they're probably on Wall Street. They're probably not in political science departments. I mean, is that would that be your intuition too?
I mean, they're in both places.
Yeah.
But again,
Where do you
there's so
think? Where do
much
you think?
dispute. I mean, there's so many interested parties that, with statistical analysis, it's just possible to do it so many different ways to get the answer you want. And so, I'm sure if you're in the know, you could know who is playing those games and who's not. But the rest of us from the outside find it harder to tell.
Yeah, but your idea of your idea of incentives and people getting things right, I think would give you an intuition that the stock people playing the stock market are doing better than political scientists, or you don't have that intuition.
I mean, it's definitely true that there's a lot of very smart people playing stock markets and financial markets, and that a lot of them make money. Uh, but they mostly make money from the other people trading in those markets, which has to be a warning against ordinary people trying to go out and speculate on these things.
Yeah, exactly.
That would be my biggest advice: is if you're going to play the stock market, you should be part of one of these big organizations who really knows what they're doing. Because if you go out and just try to bet against them, most likely you're going to be on the other side of their trades and losing.
Yeah. So are as So okay, yeah, this is all interesting. So you think that it seems like you're saying a little bit differently, because you're two different things, because you're saying that you want to start big with the government because it's high status and you want to start from there, but you're also saying we could start somewhere, maybe sports leagues or something. You see just sort of the big thinking as sort of a way to incentivize people, just get people excited about this stuff, but you think practicality, people have to start a little bit smaller.
So definitely just pointing to the big applications can inspire people, even if you're not going to do them first. Making that connection to people can make them more interested. I mean, this is also true for many kinds of innovation, right? You most kinds of startups or companies, you have each person doing a pretty small thing, but you want to tell them about how that's connected to the big project of the organization, and that makes them more interested and motivated to be part of the whole project, right? So I definitely, for the purpose of collecting data and sort of getting solid progress, I'd rather do small things first. On the other hand, I do think there's this interesting status strategy of starting from the top down. So I don't know if you remember the movie The Social Network, or sort of
Uh-huh.
about the early days of Facebook. And the story was there were other social networks before Facebook, but they started with sort of average people and then sort of have an average pool of people you could connect to, which wasn't nearly as tempting as Facebook because it started at the very most prestigious place, Harvard, and slowly it worked its way down the status hierarchy, adding Yale, say, or Princeton. And then at each point, as they expanded it, people were eager to join because they were eager to associate with these higher status people, right? So the general lesson here is it's often, if there's a status barrier to doing something, it's easier to start at the top and work your way down.
Uh-huh.
And so I think firing the CEO is an example of starting at the top. That is, if we think about all the different decisions companies make, it's hard to find a more prestigious and important decision than firing the CEO. And so if you could just directly legitimize using speculative markets to make that decision, you would have indirectly legitimized lots of other decisions, because people would say, well, if you can use that to fire the CEO, you could use it to fire the CFO, right? And CIO,
Yeah.
and then maybe to regional manager, and maybe to pick an ad agency, and right, you'd work your way down the less prestigious decisions, but each one of them you could have said, well, as long as you're willing to use it over there, why not here?
Yeah, I mean, you can imagine, these things backfiring. So for that specific example, the social network. I mean, if you say if you're in politics today and you say an idea came from Harvard, that's usually, I think, a negative signal. I think most people say that's bad, or at least they pretend to think that. And so, it could have the opposite effect, I guess. If betting markets become something that people in Washington do, and they're a little bit too complicated for normal people to understand, right? There could be a backlash. Do you worry about that?
Well, so let's talk about sort of the public perception of betting markets, and to what extent, what sort of attitudes there are to them, and issues with public reaction. So I was involved in this publicity fiasco in 2003 when I was part of a DARPA project where we had a research project set up to create betting markets on geopolitical events in the Middle East.
Mhm.
And then on a Monday morning, two senators had a press conference where they declared that this project wasn't going to be betting on death, betting on terrorist attacks. And that was terrible. And then, by the very next morning after that, the Secretary of Defense in front of Congress declared the project dead. And in those 24 hours, they never asked us if the accusations were correct. They didn't need to, because it was such a tiny project. Why bother to even think about defending it?
Uh-huh.
But that shows that, many people have some mental rules about, they don't think you should be betting on death. That's just not appropriate. It doesn't matter why you might be doing that, right? And so people have some things they might be uncomfortable with betting on, and that's a thing you should stay away from, is betting on death, say.
Yeah.
But if you'll notice that most of the business press tends to report news in terms of financial market price movements. And they don't tend to question those movements, right? They try to explain them, but they don't question them.
Mhm.
If the price of IBM goes up, the reporters don't say, well, that was a mistake, it should have gone down. They might say it went up because of this or because of that. But that's most accepting the prices as a good estimates and then trying to sort of explain them. That sometimes people will tentatively say, well, maybe these things are too high there, too low here. But that says that, in the business press, at least, people do defer to, financial market prices as sources of information. And then, that the potential that could apply elsewhere in society, there is a lot of deference given to financial market prices in a wide range of contexts.
Yeah. Yeah, I guess it depends on how sophisticated your audience is. It's funny you mentioned the people don't like death markets. There was unpredicted. There's always markets where where Bashar al-Assad or will Kim Jong Un be in office by this date. And there was one on Kim Jong Un last year, and there was that's basically, will he be still the leader of North Korea by the end of 2020? And it's basically a death market, because there's not much chance of him getting overthrown or voted out or anything. And there were some rumors about him having bad health, and he was out of the public eye for a while, and there were even rumors that he was dead in the press, and the market got down to something like 50-50. And I remember I bet on this. I bet that he would actually stay in office, and he did. And Kim Jong-un,
we have a more dramatic example of that in the U.S. presidential betting markets. You might know, the chance of Biden at the moment is like 20% being the next president, which the chance of Trump is 30%, right? So, but Biden's the president right now, and Trump lost the last election. So why would the Biden odds be so low? Well, the story is he might die, or become obviously incompetent and then not a candidate.
Yeah, I think it's some combination of it's funny because the market has been underestimating Biden for a really long time, or at least in my opinion, underestimating him. I've been betting against the market. I've been winning, but yeah, even when he basically wrapped up the nomination, it gave him a 70% chance of being the nominee, which is just which I thought was ridiculous. And it also always overestimated the chances, I thought, of Trump dropping dead, not just when he had COVID, because there was that brief period where it looked like he could actually die. He was in the hospital.
So let's just pause and notice, it's quite possible to look at these prices and say, well, that doesn't look right. Just like you can read a newspaper article and say, that doesn't sound right, or any other analysis anywhere else, right? So why am I recommending these market prices compared to anything else? Well, first of all, there's this track record. They do better. But there's this other argument which says, okay, if you read the newspaper article and you think it's wrong, what can you do about that? You can just complain. If you look at the betting market price and you
Yeah,
think it's
exactly.
wrong, you can make money
Yeah,
betting against it and fixing those prices. And that's
yeah,
the engine that makes them more accurate is all these people that can be enticed and invited to come fix the problems.
yeah, exactly. So yeah, I bet on Biden not dying and Trump not dying and both of them making it to election day, and yeah, I made money off of that. You're
There you
right. So
go.
the market's good.
And
Kim Jong
so
Un lived
I'm
too.
not going to certainly argue that no one could ever find a mistake in these things. The question is,
Sure.
when you can find a mistake in things, which institution gives you the best opportunities to fix it?
Yeah, and you can compare the betting markets to just like punditry, because when I listen to pundits, they never gave Biden a chance either. So it's not like the pundits were all saying it's going to be Biden. I remember most people were talking and they were
So let
saying,
me at this point admit what I would say is the biggest problem,
uh,
which with futarchy and with some of these other decision markets, which is that they make hypocrisy harder, which is actually a problem. You might
yeah,
think, well, hypocrisy is a bad thing. Making it harder is good, right? Well, let's walk through that. So at the moment, say ordinary people can claim to love trees and they just care a lot about trees. Trees are wonderful and they certainly wouldn't want to have fewer trees. But then they elect politicians who have to make choices about trees versus other things. And those politicians can probably read the public and say, well, they say they like trees, but they don't really like trees that much. So I'm not actually going to go cut down a bunch, save some trees by interfering with something else. And then if the public ever finds out that somehow like not everything was being done to save trees, the public can complain and say that damn politician, they're corrupt. They were bought out and I sure hate them. Let's throw them out of office, right? Because the politician is allowing the public to be hypocritical, to pretend they care more about trees than they do. And this happens all through the political system. Like, for example, we have laws against prostitution that we don't enforce very well, which allows a lot of prostitution. So people can have prostitution and pretend they're against it. And similarly with drug laws. And so a lot of our laws are, in some sense, to allow the public to pretend to have certain positions that they don't really have. And the prediction markets, the futarchy decision markets, don't make that so easy. That is, if in the national welfare definition you put a high weight on trees, then the speculators are actually going to approve the policies that do, get you more trees. And if that's not what you wanted, then you won't be happy.
yeah. But I mean, there's such a, I mean, it's such a, there's such a step removed when you're talking about voters and what they want, right? So they want trees,
But I think
right?
it's even when we talked about the example of hiring people, right? So, you
Yeah.
have a couple of job candidates and you want to hire the best one for the company, supposedly, right? Well, I think actually when a person volunteers to be in charge of a hiring committee, they don't actually intend to pick the best person for the company. They intend to pick the best person for their coalition in the company. And forcing these metrics of who was best for the company would interfere with their plan to pick somebody who's decent for the company, but even better for their coalition. And that's just a sort of thing that happens in many organizations. You would be uncomfortable setting up this process that didn't give you the flexibility to pretend to do A while really doing B.
Yeah. So changing gears a little bit, do you think that perhaps a foreign country, perhaps some kind of dictatorship, might be more amenable to these kind of things? Because think of it this way: they're looking for they're often looking for a sense of legitimacy, a reason for status that is not based on the dominant culture, which says you need elections and you need democracy and you need popular legitimacy.
So I think to answer this, we have to realize that there is a world elite culture.
Uh-huh.
And this was very striking to me at the beginning of the pandemic a year and a half ago. So at the beginning of the pandemic, the usual public health experts took their usual positions, say, against masks and against travel restrictions and things like that. And then this looked like an important thing. And all of a sudden, elites everywhere started talking a lot about the pandemic and discussing what they thought was the right thing to do. And they decided something else. They came up with a different plan with lockdowns and masks and things like that. And once the elites had decided on that, all the public health experts caved and said, yeah, that's what we should do. And not just in the United States or Britain, all around the world. And remarkably, the policies adopted around the world have not varied that much from what the elites together around the world recommended. And if you look at other areas of policy like nuclear energy or electromagnetic spectrum, drug regulation, policies around the world don't actually vary that much. There is some sort of world culture that sort of
Yeah.
talks and decides what the right thing to do is, and then everybody does it. And so there really aren't very many exceptions. So a remarkable thing was that, early in the pandemic, many of us wanted there to be challenge trials where we would test vaccines quickly and effectively, or even test something like variolation. And basically nowhere in the world did they allow challenge trials. Only, say, recently in Britain have there been the first challenge trials.
Yeah.
Because just medical experts everywhere. And you might think, why didn't some dictator somewhere want to sort of be a hero by defying the world medical ethics experts and doing it different, right? None did,
Yeah.
right? So that really suggests that dictators around the world more crave the approval of the world elites in doing things the way the world elites want to, and their political power at home is more strengthened by appearing to follow along with what the world elites say.
Yeah. Yeah. The political scientists said they call this a logic of appropriateness, and this is what guides government behavior. Although China sort of did that. I mean, what China did was go much harder on lockdowns and much harder on mass testing than other people.
Right.
And so there was a limited extent. I mean, they didn't do human challenge trials, to my knowledge.
Right.
But they did do things that were different from.
Right. So it's important to notice there is variation in regulation around the world, but it's also important to notice how limited it is.
Yeah. It's within a narrow range. That's true. Yeah, you see this on social issues. I mean, you see like Black Lives Matter protests in New Zealand, and you see LGBT flags. All the countries in the world decided gay rights was important at pretty much the exact same time.
I mean, this is really a problem for large social innovation. So, like, I've really over my life thought about lots of big ways we can make big changes to a lot of social institutions, but in a world like this where everybody sort of wants to do what everybody else is doing, it's really hard to get anybody to try any big changes.
Is an answer to this perhaps geopolitical tension? So if U.S. and China become best friends, right? They maybe they converge. If they hate each other, right? Maybe they do completely different things. Could this be a hope that you have international tensions and you have these blocks, and then at least people do different things?
I don't know, but a lot of people have mentioned recently how badly, say, the U.S. military managed in Afghanistan for several decades, and they compare that, interestingly, to how flexible the U.S. military was in World War II after a bunch of big losses early on. Right. And so the remarkable thing, the U.S. military at the beginning of World War II was not very well run and not very well organized, and they had lousy suppliers and things. And then they made a bunch of big losses early on. And then they thought it was important enough not to keep doing that, so that they fired people and fired suppliers, and they put performance as a priority because it was a big war. So apparently, that's the kind of thing it seems to require. But the pandemic apparently wasn't such a thing, right?
Yeah.
The pandemic was not a big enough crisis that we fired people who did badly on it. Neither was Afghanistan. So we're in a world where we have these big things we do wrong, but they somehow just aren't bad enough to really scare us into like trying different things. So the question is, where will we ever see some nation or big organization that's scared enough about losing to be willing to roll the dice and try some big changes?
Yeah. I think there's a, when you look at the American military establishment in World War II, I mean, the military establishment was a new thing. You were building basically something from scratch. You have now you have all these vested interests. It's funny, the places, the countries with the most U.S. military, with the most military personnel in the world are actually Italy, Germany, Japan, and South Korea, right?
Those are risky, dangerous spots. You'd want troops there, wouldn't you?
Yeah, well, maybe, but if you notice, they have something in common. Those are the Axis powers, and the Korean War, right? So basically, they're the exact same place they were in 1945 to 1950.
And so hysteresis, right? Enormous path dependence.
Yeah, exactly. Enormous path dependence. Yeah, Italy. I mean, is that obvious? The most dangerous place in the world. Maybe not. But the fact that
it's not remotely obviously the most dangerous place in the world.
So I mean, do you look around the world, and right now do you see variation in the extent to which countries are willing to not only take risks, but take risks, specifically along the path that you suggest, letting things go. There was an article in The Economist earlier this year. I don't know if you see it, but the UK the intelligence agencies had have a prediction market. It's called Cosmic Bazaar, and I actually Googled it. And I couldn't find it, and if you can't find it on the first page of Googling, that's not a good
Right.
sign.
So the U.S. intelligence agency has also had an internal prediction market going for a while. And they've had this interesting way they handle it politically. So in, say, the CIA, the coin of the realm is reports or analyses, right? Somebody writes a report that analyzes a particular place like Italy, say, and summarizes the key strategic situation there and the key intelligence situation. And there are these betting markets that exist that like where people can bet and forecast on these things. But the rule is they don't cite the betting market in their reports. So the market doesn't get credit for influencing the reports, although it probably does influence the reports. So that limits the degree to which it gets budget or attention because, why bother to bet in the market if you're not going to get credit there?
Yeah. Yeah, there is a paper that actually coming from the intelligence agencies that compared super forecasters and people who had proven some track record versus people in the intelligence community with access to classified information. Phil Tutlock showed me this paper, and you could probably guess what happened. The intelligence community lost to the people with the track record of forecasting. So you can see why the intelligence community might not want to hype up this result. Is one thing you could? I mean, would you just? I mean, it seems like there is a lot of data.
Right. So clearly, the intelligence community is basically saying, yes, we know we could get more accurate estimates from that, but we don't want them. We like our current system, right? If they were scared, that might turn out different, right?
If they were scared of China,
right. Some external threat. I mean, the same thing was true about my betting market publicity fiasco in 2003. So this was soon after 9/11, and just 2 years later. And people looked at the betting markets and said, oh, you're betting on death. That's terrible. You have to shut them down. Like if they were really scared of terror attacks, if they were actually feeling like a large degree of threat, they would have said, to heck with this rule against betting on death. Let's turn on these markets. Let's find out where the attack's going to be so we can stop it.
Don't they say bin Laden is just going to put all his money in the market and then attack?
Right, well, that was crazy because these were relatively thin markets and they weren't going to have a lot of money in stake. And and there's basically a fact that people don't know about the markets is that many people criticize by saying, well, somebody will try to manipulate the markets by betting on one side, not because they know better, but because they're willing to lose money in order to distort the market price. And that is true. There are people willing to manipulate markets, but that actually makes the prices more accurate. So, for example, on the fire of the CEO market, you say, well, the CEO wants to keep his job. So he will bet in these markets in order to make itself look like the price will be higher if he stays and lower if he leaves. And yes, he would have an incentive to do that. But when other traders know that somebody will be trying to manipulate in the market, they know to increase their trading and their efforts, and that compensates and actually on net makes the prices more accurate. And that's something we see in theory and we've seen in the lab and we've seen in the field. So these markets are robust to attempts to manipulate. In fact, people who want to manipulate them make the prices more accurate.
Yeah. Do you think that one way thing we should do is raise the status of thinking about these things and thinking about betting markets? Because it seems like there is data out there. I mean, you could go to the stock market. We've talked about, predict it. You can go back to elections. You could see you could calculate some kind of conditional probabilities. Do you think, a good thing could be just to have more economists just interested in these questions and looking at data and, coming up with studies?
It couldn't be bad, but the question is just how much hope should you have? And that's a key question about a lot of institutional choices. So honestly, if you just look at institutional issues in the United States or other countries, and you ask which kinds of choices do people get really excited about and emotional and interested in, if you tell them about a policy change that would just benefit most everybody, they yawn and can't be bothered to pay attention. They would just lose interest, right? If you tell them about a policy change that will help their side and hurt the other side, they just love that. People are really eager to fight in a battle. And so a lot of the topics that energize them are the topics that are represent a conflict between one group and another group. And that means institutional changes are just boring, because even if you can find out a better institution, it just doesn't map onto their side versus the other side.
Yeah, well, that gives me an idea for an investment idea. What if there's, so you see these things in the conservative press, they're talking about some corporation has gone woke, right? They have a critical race theory trading at
Right.
Coca-Cola or whatever. Basically, you could have some kind of mutual fund that just shorts the wokest companies, whoever
Sure.
conservative media, whoever Fox News happens to be complaining about at the
Right.
time.
And that would be a way in which you are sort of taking a side, and then that would be more energizing to people.
Right.
People
Or
would just like to take a side.
in those corporations. Right,
Right.
exactly. And then
But
eventually you would learn if this thing lost money year after year, you'd learn something, or if it gained
sure.
money,
In fact, ordinary people would be more interested in betting on the stock market if they could simultaneously be taking a political side with their stock market bets.
yeah.
Which
But
is,
but they can. Yeah, they can. I mean, right now we have all these outrages over some corporation is doing this or that. So,
right.
you'd figure, I wonder if that's actually, inspiring more people to get into the stock market. It's hard to tell with Robinhood, and expanding making it easier. But you could imagine some entrepreneurs doing that, right? You could imagine somebody setting something up and, advertising to people, we're going to short all the woke corporations. And you can imagine them doing well.
Right. So the fundamental problem is, how do you create a community that just cares about overall benefit of a nation or a company or things like that? And unfortunately, one of the main ways that's ever happened is war. So we talked about World War II a bit before, and there's a literature that suggests that war has been one of the main engines of innovation for the last 10,000 years, which is a terrible fact, because it means that if you want more innovation, you'll have to have more war, and war is just a terrible thing.
Yeah.
But all this time of peace and prosperity we've had for a while here, we also do seem to see a degradation in our interest in sort of coming together for overall collective benefit, and more focus on internal divisions, and more focus on sort of just doing whatever helps us in these little local battles, and not caring very much about the overall nation, because we're sort of assuming that's okay.
Yeah. Well, I mean, you see nationalism sort of manifest itself in, say, soccer games. Like Germany and France are not fighting wars, but they'll go to soccer games, and there's this hooligan culture in Europe where people really, really get into.
Right, but would they be willing to change some key national policy in order to make sure they could win more soccer games?
Well, I think it would have to be. I think the class of the people, the class of the people who makes the policy is different from the the soccer hooligans, right? And so it would just be a matter of the elites having some kind of national pride, or it doesn't. I mean, does it have to? I mean, does it even have to be? Does it have to be national? I mean, could it be just could it be just sort of a class pride or a pride in background? These aristocrats, before there was mass nationalism, right? There was war, right? There was these aristocrats, and they had their own value system, and they had their their codes of conduct,
right? Well, I mean, the key thing would be, say, if the elites of Romania, for something, want Romania to look better in the world's eye and try to make Romania be run better overall. That could be an energy that would, focus on overall quality of Romania, as opposed to the left elites in Romania fighting the right elites in Romania, right? And being in a battle of taking down the other side.
Yeah. And so I think what's really so it sounds like what's really dangerous is sort of there's this global elite culture, or it's not just public health. It's like on social issues, on just
right. It's and they have strong consensus, and sort of you just have to follow the global elites to be part of them, and so there's not so much competition within those global elites in that sense for doing things effectively.
Yeah. The competition is just the less well-off people in their own country.
I mean, if you think of, say, Elon Musk, right. So if the global elites go test Elon Musk and say, well, he's not doing it right, he needs to follow these regulations, right? And then Elon Musk is actually like making things better and making a better internet and a better, space industry or whatever. Well, does Elon Musk, if he wins, does that change the elites to be more supporting him? Or do they just get more mad that he defied them and he seems to be winning?
Yeah. What do you think about the potential? I mean, there's a lot of people in Silicon Valley, people in the crypto world, people like my friend Balaji Srinivasan, and Mark Andreessen, and people like this who really take a dim view of the sort of the Davos set, the New York, the New York Times reading public, and they see, and I don't know if they see themselves this way. I'm not speaking for anybody, but but that could potentially be a kind of counter elite, right? I mean,
And the
maybe that.
danger is that if the regular elites see this defiant group of tech elites winning against them, that makes
Yeah.
them really mad and wanting to take them down.
Well, that's the risk of competition, right? The good side could, the more productive side could lose, right? But if we're thinking about how to have competition and how to, if we're not going to have wars, if we're not going to start
Right.
wars,
If we can have a fair competition, then it would be good if different parts of the world, if the European, say, tech people said, well, we seem to be losing against those people, how could we organize ourselves better? Right. If the different parts of the world fear competition and then as a result try to find more effective ways to organize themselves, that's great. That's exactly what we want.
Yeah.
But they
Yeah.
need to fear it enough to actually be willing to make big changes.
Uh-huh.
And so the prediction market stuff we're talking about is actually relatively big destructive changes that even tech companies have not been willing to do.
Right. So are you involved in any projects at the moment? You talked about the post 9/11, the DARPA grant. I mean, is there anything similar going on now, or
I've
is
been
there anything
advising a number of companies over the years, but I haven't seen sort of big trials of the sort I'd really like to be part of. But I keep searching.
What is the limiting? If you had enough of investment, say somebody, if there was some donor who wanted to help you do it,
Right.
Would it be a big help, or is there some regulatory?
Oh, sure. Of course, it could be a big help. But so there's two paths to go. One is sort of do this fire the CEO market, in which case you'd have to go offshore and just defy regulators to set something up, right? But with enough money, you could do that. But you'd have to have a funder who was willing to be associated with something like that. The other approach is you go within organizations and you fund these, small scale trials within organizations. And then what you need is both money and an organization willing to put up with the disruption. So let me just tell you a story about deadlines. So one of the most successful applications of this over the years has been deadlines. That is, quite often people have a project and they have a deadline and they have these regular project meetings and they get together and they all tell themselves, we're on track, we're going to make the deadline. And then they open a betting market and all of a sudden the prices drop, below 5%. That say, no way, you're not going to make this deadline. And of course the market's right. And that really bothers the people running the project and who don't want to continue it. And so you might ask, well, don't they want to know if their project's going to make the deadline? So that's what I want to explain now. So if you have a project with a deadline, one of the main things you ask yourself is, if I fail to make this deadline, what will my excuse be? And I want to have a good excuse if I fail to make the deadline. And everyone's favorite excuse is the following. We were going along just fine, and then at the last minute, some weird thing came out of left field and knocked us flat. It'll never happen again. It's so weird. It's so rare. There's no point in keeping track of this thing or holding anybody responsible. We should just move on. Now, that story is interfered with if you have a betting market that said all along, you're not going to make this deadline. The story had to be, we were going along fine, and then at the last minute. And that's why you have all these project meetings where everybody says we're going along fine. And apparently project managers would rather have a better excuse if they fail than have better warnings about failing the project.
Yeah. That makes sense. But that's one path is just to get corporations to act in their own interest, and you might
right. And I actually think that is the most promising path. So, but it would help to have other people spur them on by funding these trials that could get them to overcome their reluctance to do these disruptive things.
Yeah, it really sounds. It sounds like this should. It sounds. Yeah, I can see the barriers, but it doesn't sound like this should be the most difficult thing in the world. Right? You just have to have somebody out
But
there.
I think if you look at the history of financial innovation and social innovation in general, a lot of social innovations were adopted and changed long after they were possible.
Yeah, right.
So, for example, like life insurance or commodity markets, those were possible in the ancient world. They've been possible all through history, but they didn't really take off until, say, the late 1800s. And that's because it just takes a while for people to be willing to try things.
Yeah, although I don't think technology is that independent. I mean, you have greater wealth, you have greater
Sure.
bookkeeping,
So
all those
as
sorts of things.
society gets richer, then we just have more room for lots of kinds of experiments, and there's just more
Yeah,
just random ways in which something might get tried.
yeah, especially yeah, since a lot of this is on software, and that's the cost of computing and all that is going down. So yeah, on that note, are you optimistic about maybe not in the immediate future, but someday
I'm definitely
futurology being the
optimistic
way
in the long
forward?
run. That is, the fundamental stance to say is when you think of technology, you think about gadgets and materials and maybe software. But social technology is also technology. We also have technologies how we run meetings, how we organize firms, how we compensate salespeople, how we vote. That's all technology too. And we've been
Sure.
innovating in that technology as well as the physical technology, but we just have different incentives and dynamics in the social innovation because people can't own it as much. And so they don't like create startups to sell it as often. And we have a lot more of these psychological barriers to the social innovation, right? So if you're in a company that has physical technology and somebody suggests, making a new material, you can probably make that new material and leave your organizational structure alone. It doesn't threaten who's in charge of which division so much. But if you have social innovation, it sort of goes to the heart of who's doing what and who's in charge of what. And that's more threatening.
Mhm. Okay, and all right, so yeah, this has been a great conversation. It's fascinating. If there's anybody who's out there who's listening to this who wants to help, who wants to advance the cause of
You know where to
futurarchy,
find us.
they could just log
Absolutely.
on to Twitter, email you, and
Absolutely.
you'll get that document. Okay, it's been a pleasure, Robin. Great talking to
Great
you,
talking.
and yeah, it's been fun. Thanks.
Okay, take care.